entities, and or organizations that may not be directly owned, managed, or controlled by the Real Estate Life. All credit decisions, including loan approval, vary based on your specific loan request and credit profile. The information provided on this show is merely to allow the listener the ability to become more familiar with such potential opportunities and to obtain more detailed information on the suitability of such opportunities to the listener's personal and financial situation from the companies, entities, and or organizations involved.
A new home you've dreamt about for years, and there's only one thing standing in your way: getting a loan. Rest assured, United Mortgage Corporation of America is here to help make your dream a reality. Get answers, get results, get the service you deserve. What kind of loan do you have? Call now at 888-LIFE-980. That's 888-5433-980. Or go to the web at yourrealestatelife.com and take action today.
Welcome to Your Real Estate Life. It's your day in real estate radio. I'm Mike Harris, President and CEO of United Mortgage Corporation of America, mortgage loan origination license 233410, and company NMLS 3189. You're listening on Fox Sports, Ventura 1590, 94.7 FM, KVTA, and KEarth 101. Our Sunday audience, I'd like to welcome your streaming audience at kvta.com, KEarth101.com, and on YouTube at Your Real Estate Live. Yes, on YouTube. If you want to go back and actually see the face for radio, you can. It's going to be live streaming, and then it'll be on and showing up there as well. But I want to talk to you. 888-543-3980. That's 888-543-3980. And we're streaming actually live on LinkedIn right now. I do see that. I believe the YouTube is there, but it will be there shortly. But I want to talk to you about your real estate life. You know, I was looking at what's going on right now with, the Fed. The Fed this past week, they cut a quarter. We knew it was coming. It happened on Wednesday. And a lot of people are going, hey, my gosh, rates are going down. Well, they were already down from Wednesday. Initially, we saw a good bounce, but that was about an hour. Then we kind of reversed it, went up a little bit more on Thursday. And then Friday, nothing, stable. So we really didn't lose a lot, but we didn't gain a lot. So now it's a question of tuckering it in and getting ready and seeing what happens. And of course, beginning of next month, the jobs numbers and everything else. So to kind of summarize, we had 11 members in favor and one kind of dissented a little bit. And his dissenting vote was for a half, and our new Fed member. So we're looking at the trend, and we're already seeing it well over 90% that the Fed will move at our next meeting at the end of October. So as we kind of angle to that, rates might get a little bit better. But it's all really data dependent. So we have a window. It's 6 weeks between each Fed move or decision. And if there was an emergency, then yeah, they're going to go ahead and throw something in. But as I throw 96.8% and odds of a Fed move going lower, all these fun little things occur. Sure, these things are out there. And I do have a weekly newsletter that I send out, and went out actually on Friday. And I still had the headline about the September 17th. It was 96.8% odds of a 25% move, but as we know, it was 100% because it happened. So I didn't take that header off. I'll fix it. I'm going to start putting in the percentages for the next move in there, but I think right now it's about 90s, low 90s. So we are looking pretty good to that. So just a little bit off of what I was doing, but you got the picture. You got the picture. So in English, Fed funds rate is the benchmark banks use for their overnight lending and borrowing. It doesn't set mortgage rates directly, but it moves financial plumbing that influences mortgage costs. So we look at it very carefully. We look at those items because it really does make a difference. I mean, it makes a difference in the Fed's balancing act because the Fed's looking at inflation and jobs, employment. Now, there's some ideas right now, and there's been some items that came in. There's an introduction of the Price Stability Act of 2025, which is trying to end the twin mandate of the Fed. So they want them to maybe concentrate only on inflation instead of jobs. But we've seen that jobs have been starting to change. We're watching that occurring, and we'll see what this goes. But it was introduced by a House Republican-led committee. French Hill from Arkansas introduced it, and we'll see what that does with the dual mandate. But right now, that is their dual mandate. They're looking at both employment and inflation, and they're trying to balance that out. And it's not that easy to do. Jobs, we're looking at interest rates, and for you, it's your wallet. Your wallet is very, very important. So as we look at that, you make decisions about your real estate life based upon all these other things that are happening. And of course, you're working, you're bringing home your check, you're bringing home your money to make the engine go. And we have individuals now that are looking at the potential of adjustable rate products. Adjustable rate products. Now, normally, people are going, why adjustable? Let's go with a fixed. Let's go with a fixed. It's changed a bit because depending upon your outlook and what you want to do, it could be different. Whether you're doing something for 5 years, 7 years, or you're doing a 30-year, or maybe you have somebody buying down the rate. Maybe you're buying it down for 1 year, 2 years, 3 years, depending on your timeline. Maybe it's other people's money. Maybe it's the realtor, the seller, or maybe even the lender. So your product, your loan, your decision can make a change to a buy down or an adjustable rate mortgage. Now, we've seen some of the variables be about 3/8 lower in rate than that of a 30-year fixed. So we have to look at that 3/8, what it's saving you today to what it may cost you later. But depending on market trend, maybe you can refinance to a longer term if the market moves. But if the market already moved, your new fixed rate is going to be higher. So you need to be ahead of the curve with that. And then you want to look at what expenses and what savings that maybe you're giving up to make that next move. So the line is, you, of course, marry the home. You get in the right price. You work with your professionals because you think working with a professional is expensive. Try working with an amateur. You really got to make those decisions and make them wisely, but think about them now. But when you go ahead and get into that property, you marry the home. You can date the rate. You don't have to keep the rate. You can change the rate if it makes sense. If it makes sense because of numbers, affordability, but sometimes you're able to manipulate rates in order to pay off more expensive debt to eliminate debt sooner. And we talk about that a lot. And we have a webinar on Tuesday night at 6 p.m. that you can join, and you can get information and an invite. You can send that to me, interest@aheadformoney.com. When you send that, I'm going to send you out some information. I'd love you to come. I really, truly would. When you come, you're going to get great information. You don't have to be on camera. You don't have to speak. You don't have to do anything other than 1 hour to get great information. Then we're looking to utilize it for you or people that you assist and help. People that you, maybe as a realtor, as an insurance professional, financial planner, CPA, divorce professionals, helping people separate and understand debt. There's a tremendous opportunity. Communicating with your current, past, and your future clients. And if you are a consumer who's watching or listening today, I want to work with you. I really, truly want to make a difference in your life. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. We'll have more after the break.
Your equity position has started to improve? Call about the removal of your private mortgage insurance or mortgage insurance premium and save money today. Call 888-5433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as one third to one half the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. Want to welcome our audience here on KVTA 1590 and also on KEarth 101. We are streaming right now on LinkedIn. It's good on LinkedIn. It's eventually going to go over to our YouTube as well. So we're doing a lot of things with a little bit of media. And we have some people watching, and thank you for comments. David, I do see you. Thank you very much. Look forward to talking to you. I'd love to have you take advantage of working with your clients and your future clients regarding a perfect financial GPS. What that does, again, it actually lets you guide your clients for the best financial decisions for their budgeting. Checking and savings. You don't need a insurance policy. You don't need to have a home equity line. Checking and savings. And we can show and navigate through a process to pay off their debt in as little as one third or one half the time without changing their lifestyle. We have the ability to do that. Some as little as 5 to 7 years. If you have the opportunity to go back to your database, the people who got that 3%, 4%, 5% loan, I'm not talking to you mortgage loan professionals. It gives you a reason also to talk or gain referral. It makes you present. You are trying to eliminate their debt and create wealth. How about you go back and you find out and you're able to help them, and then you hand it back to your realtor referral partner and they want to go ahead and buy another property. Maybe they're ready to move up and sell. There's so many ways that you can help people when it comes to organizing finances. People are still using various color stickies all over and reminders and envelopes and this and that, and they're trying to get through it, and they got used to it. That's what they do. Maybe they're using an Excel spreadsheet. Great. They're doing something. I want to make it better. Let's look at this example. When's the last time you reached in your glove compartment and pulled out a roadmap? You tell me. Maybe a Thomas guide. Maybe some still do. You got it marked with all the little book things and things. Okay, got it. But let's upgrade. A perfect financial GPS that gives you best and most accurate information, but doesn't talk back to you. It gives you perfect answers and information. It has forecasting, tells you day by day to your bills with the right input that we would do and help with, where you have your monthly, your quarterly, your semi-annual, your annual items that are inputted in, all perfectly there, all perfectly there, and giving you the right results. And we would illustrate this, show what the results would be. Now life changes, things get added, things get subtracted, and it would move with that. You would have full access. Now, no one's touching your money. No one's taking your money to make payments that you don't want to make. You are still making those, whether you ACH them, whether you write a check, whatever it is. But it's telling you the best time and the right place to emphasize to eliminate debt faster. Whether it's just the mortgage or it's mortgage, credit cards, car payments, everything else, student loans. Yes, student loans. A lot of people are waking up to that part where they're going, oh my gosh, they accrued my interest on interest. Oh my gosh. So that's a whole nother problem. But we can analyze those and make some decisions. But this isn't necessarily mortgage planning, but it's about life planning. And that life planning will lead to your mortgage planning, because then you're looking to finance or buy real estate. We've been able to refer to real estate partners as a result of getting people in a better position. Most recently, I helped with an equity line of credit where we're getting $90,000 on a line of credit. We have a divorce that occurred. The spouse is paying the husband $84,555. So there's a little bit of money left over, not a lot. She wasn't looking for that, but it takes care of that. We're looking at the monthly obligation, which is a little over $700 a month for that number, the 90,000. And we qualified on a debt to income ratio based upon alimony, child support, as well as additional income. And we're getting that equity line done. She is also assuming the first mortgage on the loan. She wasn't on the loan. So she's getting an assumption on the first, and she's getting that line of credit, and we're getting that done. We're working with other professionals to get the job done on this case. And I say professionals. You're only as good as your offensive line. Football analogy. We're in football season. You have a line of people protecting you. Your client is the quarterback, or you as a consumer is the quarterback. You're only as good as that line's protection. If a defensive lineman comes in, you're a scrambling quarterback. Don't want you to be scrambling. I want to eliminate that variable. We want to move down the field to score, not just kick a field goal. That's a start. We want a touchdown and the extra point. And maybe we go for 2 and we're successful there as well. I want to make sure we optimize our results, have the best information to do so, but it starts with you. 888-543-3980. That's 888-543-3980. I want to talk to you about your real estate life. I want to talk to you about your book of business. We want to optimize your results by getting out best information to you and your clients. If you are a consumer listening to our program today and want to find out more, I want to help you. But I would love you to expose my information or my willingness or want to talk to your team of individuals you rely on. Tax, maybe it's your past realtor. Have you heard from them recently? That could be a problem. Maybe it's your insurance person. All the sphere of individuals in your financial focus in life. I would love to have the opportunity to speak with them so they can help others. Because I'm reaching one person at a time, but I'm trying to reach more than that. And if I can do that through other voices, we can do better. 888-543-3980. That's 888-543-3980. Now, I was talking about adjustable rate mortgages, and I went off on this whole direction. But, there's fixed rate mortgages, and maybe that is the right thing. You kind of set it, forget it, and do it. But when you make that fixed rate decision, you still have to understand, what am I going to pay to get it? Do I pay points? Do I pay fees? Am I doing more as a result? You shouldn't want to. Maybe, if it's other people's money. If it's money that you can't use towards other expenses, insurance and closing and various other stuff, and you don't want to leave money on the table, maybe. But bottom line is, we want to look at your timeline and what you're thinking and what you're doing to make that right decision. If you don't have that, you have nothing at all, because then you're making a decision and then you're going to regret it and go, I'll do better next time. Next time. It's this time. 888-543-3980. You have the ability to save, but it's saving for the right reason. When the Fed lowers the discount rate, your CDs and savings just got a little bit worse. So you go online now looking for that savings account. It may not be that 4. It could be possibly not quite be that 3. Some maybe, but now your savings money is down. So you need your money working properly. So setting up the right buffer, the right number that makes you or allows you to sleep at night, and then using those funds to reduce other higher interest obligations, but having access if you need it. That's why we evaluate and look at a home equity line of credit as the access point of money if it is needed. And if it's not needed, then we're looking at a rinse and repeat method to eliminate your debt structure even sooner. All of these things matter. They really, truly do. You do what you do best. This is what I do best. It's not that complicated. I put numbers in the middle of my desk. You put them off to the left or the right, or maybe off your desk altogether. They don't come back. That weren't that important. Is that the philosophy? Uh-oh. They're going to come back and haunt you. So my goal is to make sure we handle them efficiently. We know the plan, and it's easy to follow. And having the Money Max account, a perfect financial GPS, will do that for you. Find out more. Send me an email, Michael, or actually, let's go this way, interest@aheadformoney.com. When you send that, I am personally going to respond, not AI, it's me. I'm going to go ahead and get you out a link and some information directly for you. So when you send me the email, of course I have your email. Love to have your name if it's not identified. Your phone number is great for my records. No one's calling you. I'm not selling your information. It's going nowhere else. It's for this purpose. If you tell me, no, I'm not interested, it's done. If you want to get my newsletter weekly, let me know. I'll get you on that as well. And every Friday, you'll get some information about the market, the past, and the present, and where it's going. And you'll get that usually on Friday mornings. But I want to be an information source. I don't want to be the nag who's bothering you. But when you're looking to do something in way of real estate finance, or anything tied to funds or money, love you to think of me. I'd love to guide you through that process, whether you're getting a loan or not, but making sure you're in the right decisionary mode, because it is important. You don't want to have regrets, because it's a large regret to have when you're buying real estate. You want to make the right move for the right decision. So it's really, looking at all the different factors, but having someone navigate you through without confusing you. It's looking at the options when you're purchasing or refinancing and where it pertains to you, because some people may like the fix, some people may not. But what the Fed doesn't directly affect mortgage rates. It actually moves after the bond market's been pricing in already. So when the Fed moves, it got your attention, but your attention should have been about a month earlier, because we already hit about 1 year lows. Now we just moved off slightly from them. We should renew some movement to get closer as we head to our next Fed meeting at the end of October. But it is about timing for me, because saving you money is what I do. I don't like spending your money. It doesn't do anything for me. So if I can save you money, that's what I do, because that's what I would do personally. A lot of times as we're doing transactions, we have clients that ask, what would you do? And I know it's a direct question and I don't want to influence outcome, but I kind of give a good answer to where my position would be. And they go, thank you so much for that. Thank you so much, because nobody else was telling me, but I appreciate you honestly telling me about it. It's looking at things from all directions and understanding. And as a professional, I've been doing it for 38 years. I am licensed here in 5 states. I'm licensed in California, Colorado, Montana, Texas, and the state of Washington. I do debt service coverage ratio loans, investment loans in 46 other states, or 46 states. I do have a California broker's license, but I don't list, I don't sell. I also have a life, health, and disability license, but I do not write the insurance at this time. I do refer. But I have that knowledge and understanding. And I look at it from the full circle of events surrounding a purchase or a refinance. I've talked about homeowners insurance. I don't write homeowners insurance, but I talk about it from a consumer myself who has policy, and the general trends I see when people are looking to secure it for a purchase. Depending on your zip code, writing insurance is very difficult. Or it could be easy, but at a higher expense. So you want to understand budgeting. It used to be, hey, it was a last minute thing. Now it should be a before thing, so we can understand the premiums involved. It's also having that right deduction or deductible to your policy. And talking with your insurance professional is very important, so we can get what is called the deck page, the 1-page item that comes over to us, so we can also then have your premium, so we can get you qualified for your debt to income ratio. During the loan process, it's so very important to communicate with the professionals on your team as well as them to you. It's no surprising items, nothing that comes out of the shoebox going, oh my God, surprise. Well, I bought a car. You what? Uh, what's the new payment? When the debt ratios are tight and you pre-approve for a purchase, adding a new debt or adding an item to a credit card or opening a new account, it will raise questions. The lender looks, oh, gee, they're looking for more money. Did they get a new debt? Then we need explanation that no new debt was looked at. When you start shopping and looking at other lenders, they run inquiries if they're running your credit. We can do what is called soft pulls as well, but that's another whole story. But they're running that, and now they want to know why. They want to know that you didn't do something else. That's why when we get gift funds, it's a gift letter, and then we want to show the transfer from and then to, because they want to make sure it came from somebody and not you, and you didn't go get a line or a personal loan that's not showing yet, but right at the close it would. So that's a nice surprise. That's happened over the years. Technology now kind of eliminates some of that because things are found. The problem we have is when it happens, the loan closes, then there potentially is a post problem to the loan. Those are things that from my side I look at, and we got to be very careful because I really don't want to own your loan for the rest of my life. I really don't. So I want to make sure it's done correctly with all ends perfectly correct and tied and understood. We've had individuals buying new homes. Oh, can I buy furniture yet? Oh, well, I'm not going to pay any interest for 12, 24 months. Is it okay? Well, if that item is an inquiry, it's on your report, even though it has no payments, there's a balance and there's a payment that has to go associated to it for qualifying. It makes a difference. It makes a difference. You really need to make sure that you're doing the right thing as you're in an escrow. And for people that are going through that, that's where your team's going to help you achieve the best results. So I was looking at a lot of the economists and things that are going on and what they're predicting. We're going to see October's move. That's where I'm at. I know there's a lot of news in between that's going to dictate. We're over 90%. I see it. I've been saying it. I've been saying we're going to have 3 moves. We had one of them. We'll still have one in December, in my opinion. Some people are saying, oh, maybe we get a larger move, or maybe no move and we get one. And okay, I believe both are coming. So we'll watch where the bond market goes. We'll watch where interest rates head, and we're going to sit here and get that best price for our clients. If you're a realtor, we'll work with you, get your pre-approval. We'll communicate, make sure that process goes through cleanly, smoothly, and with no hiccups. We've been working with individuals with condominium projects and townhomes and various items related to various legislative items in regards to balconies. So making sure the homeowner association and the coverage and what's going on pertaining to those. So that's going to be very important to discuss as it becomes more the rule that we have to follow. So some of those are budgeting, getting their inspections and whatnot. So that's important as you talk to your local professional, your realtor, or look for a referral, making sure what kind of property you're looking to buy. Various disclosures. Yes, I'm licensed as a broker, but I don't want to do the 100 and some odd things that a realtor does that they do better than I do, that I know exist, but it doesn't mean just because I have the scalpel, I should perform the surgery. I'll stay in my own specialty item where I do best, and I can look at corrections or items needed as a result of what I do. But I don't need to be the one necessarily understanding that, oh gosh, I forgot. No, that's professionals on your team doing their job, integrating correctly to the others that will do their job. It's just sometimes I have to lean in because certain items haven't been done. So then the yellow sticky for somebody else. But sometimes I'm working with people who are right on their job, and it's a pleasure to do business. So go to our website at yourrealestatelife.com. That's yourrealestatelife.com. You can get started at unitedforloans.com. We are for loans. We're not for the interest that you're paying. So we want to help you with the process, get you started, understand where you are, and we'll continue to do that right after this break.
Looking for a place to start? United for Loans is the place for you to start your refinance or purchase process today. Call 888 5433-980.
Yes, it's a little scary right now, but every crisis presents an opportunity. How many times have you looked back and said, why didn't I act? Do not try to navigate lending without a map. Tune in Sunday at 7 a.m. on KR's 101 with host and CEO Mike Harris of United Mortgage Corporation of America to discuss your real estate life. What should I do? Buy, refinance, sell, or hold? United Mortgage Corporation of America is open for business and ready to lend. Visit UnitedForLoans.com or call 888-543-3980.
Lending can be a bit confusing. Numbers can be tossed in one direction to another. How can you make it all stop? United Mortgage Corporation of America, UnitedForLoans.com can be your guide. Call directly at 888-543-3980 for what you need to know when financing a home of your dreams or commercial property. Call now at 888-543-3980 or visit at UnitedForLoans.com. That's 888-543-3980.
Welcome back to Your Real Estate Life. It's Your Day in Real Estate Radio. Thank you to our audience today on KVTA out here, Fox Sports, Ventura, and also on KEarth 101. We're streaming right now on LinkedIn. We'll be posting over to YouTube as well. Didn't get that combined today, but we'll do that for our next time. But first, we're going to be talking today to Marisha Charbonnet with Family Security Law Group. Now, Marisha, you're going to tell us about the differences between revocable and irrevocable trusts and how these choices can really affect their heirs. Tell us more about it.
Good morning, Mike. Thank you for having me on the show. This morning, I wanted to address a common point of confusion, and that is, what is the difference between a revocable trust and an irrevocable trust? A revocable trust is a trust that can be revoked, meaning it can be changed or tossed out altogether. An irrevocable trust is a trust that cannot be modified or changed after it has been created. Most garden variety trusts are revocable trusts, which makes sense because most people want to have the flexibility to change and update their trusts as their lives change. For example, you may be naming a parent or sibling as your successor trustee when your children are young, but you might want to make a child the successor trustee once they have reached adulthood. Similarly, you may want to alter who you have designated as your beneficiaries. Perhaps you've decided not to include one of your children, or maybe you want to swap out one charity for a different charity. If your trust is irrevocable, you are not going to have the ability to make those changes, even though you are still alive. Sometimes clients tell me they want an irrevocable trust because they don't want anyone to be able to change it after they die. Generally, most trusts, even revocable trusts, become irrevocable after the person who has created the trust has passed away. Creating an irrevocable trust just so no one can change it later may result in unnecessary restriction and complication, since you can have a revocable trust while you are alive that provides you with the benefit of flexibility to alter it as your life changes, while still having the protection of that trust becoming unchangeable when you die. So why would someone create an irrevocable trust? Irrevocable trusts are often created for tax planning reasons and may be part of a sophisticated estate plan designed to limit tax exposure. These are decisions that frequently involve CPAs and other financial professionals. It often comes as a surprise to people that placing assets in an irrevocable trust typically means giving up ownership and control over the asset. Most people don't want to give up ownership and control while they are still alive. Therefore, irrevocable trusts are far less common than revocable trusts and should only be used after getting guidance from a lawyer. For anyone with questions about creating a trust, whether revocable or irrevocable, I can be reached at 805-496-4681 or at FamilySecurityLawGroup.com.
Thank you so much, Marisha, for that great information. Again, it is confusing. And it's about, as I said, just because you have the scalpel doesn't mean you perform the surgery. Marisha is your surgeon when it comes to this. You really got to use that professional team that I talked about, protecting you against the defense. So for estate planning and all questions, I had a client just recently. Well, I'll quit claim off and I'll add myself on title and I'll do this and I'll do that. Boy, the the damage that could cause, tax related and everything else, it can't be put back in the box. So you want to understand the consequences of that easy decision that, whoops, and I'll paraphrase, did I do that? Yeah, you did. So you want to make sure you have the right steps for the right reason at the right time. Thank you so much, Marisha, joining us today and giving us that. And I look forward to your next segment next month. It's amazing all the specialty aspects that are in our lives for reasons that we may not think we need, but when you need it, it might be too late. So again, thank you so much. I was looking at what's ahead here on the economic calendar. I was looking at on Monday, we have the Chicago Fed National Activity Index. It's a monthly snapshot of the regional economic activity. It's really a good indicator and really look at manufacturing and services and what the momentum is. So we look at that and we get kind of an idea. So we'll see how that starts on Monday. On Tuesday, we had the S&P Global Flash PMI, manufacturing and services, real-time measure of business activity. It can move some of the risk sentiment. And so we'll see how the bond traders are as these come out, usually about 5:30 a.m. here on the West Coast. On Wednesday, we have new home sales for August coming out. We'll see how that goes. Some of the builder side of it, lumber prices coming down, but the builder incentives, I'm seeing it. We have some of these homes that are being built where they were under contract and all of a sudden they now have available on them and they're already built. So some fallout's occurring, whether it's financial fallout or whether they had second thoughts. I don't know the motivations, but everyone has different thoughts to that. But now you have builders that are sitting possibly with some inventory, which then those completed homes compete with currently listed resale because they're not waiting to be built. So a little bit different. On Thursday, we have weekly initial jobless claims as normal. We'll see if there's a hint of hiring and weakness. We have durable good orders, a gauge of business investment. Now, these two together will tell us about the Fed and the hiring momentum and the capital spending. On Friday, we have personal income and outlays, including the PCE price index, the Fed's preferred inflation measure. So we'll take a look to that and we'll see if the reading and the Fed's view of inflation and the real income changes. And a lot going on every day. So behind the scenes, everyone says, oh, what kind of loan? What's your interest rate? Well, I don't know. What is it that you're looking for? It's a loaded question. Well, what's rates today? Well, I don't know. Are you self-employed, salaried? How much down? 0, 3, 4? I mean, is it 5%, 20%? You don't need 20% to buy a home these days. But we have to talk about the leveraging. So you're borrowing more. So is that money working better for you? Do you have assets or not? Where are you in your timing? All these things matter. So if someone picks up a phone, what are your rates? Well, I don't know where to start. I can tell you I've seen loans close in the 5s or the 6s or the 7s. I've seen buy down start in the 4s. There's so many different answers, but I need more information. That's where you come in. Whether you have an existing loan, you have your current mortgage statement, and maybe there's a better way for affordability today to pay down debt sooner, or maybe that need for an equity line of credit with the equity you have buried in your backyard. We have individuals that are getting $50,000, $75,000, $110,000. They're getting equity lines. So if they use 75% of it up front and they decide, hey, I'm going to pay down this and that, great. They have a zero balance. That zero balance gives them the flexibility to use it for other items, maybe debt related, or various financial planning in the future. It's having a safety net. And right now, with the Fed going down a quarter, in my opinion, another quarter, in my opinion, another quarter. In the beginning of next year, I think a quarter, and then another quarter in March. I think we still got another point ahead of us. If we can get one more point, go from 7.5 as we did to 7.25 on the prime, and then lowered another one, that's 6.25. If I'm closing equity lines with a 6 number in front, and your mortgage has anything higher or the same or even lower, because I would show you how amortized debt is a lot higher, because your 3% started at about 58% interest. You go look at your closing statement. You look at that tip on the bottom of the closing statement. 3%, what were you paying? It's not 3, because it's paying more early. And I want to move you further down the scale so you're not breaking even 50-50 at year 18. So much to find out. We're going to get you out that information again in order to join our webinar on Tuesday. I'm Mike Harris. We'll have more after this break.
Get pre-approved for your home purchase. Your landlord loves you. You're making their mortgage payment. Own for less than you pay for rent. Call 888-5433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Money, 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 must be funny in a rich man's world.
Welcome back to Your Real Estate Life. It's your day in real estate radio. Welcome our audience on Fox Sports out here in Ventura, KVTA 1590, and also on 97.9, also on KEarth 101, our Sunday audience, as they will be tuning in. But right now, we're also live on LinkedIn. We'll be posting on our YouTube channel, Your Real Estate Life. And I want to talk to you. Pick up the phone. Give us a call. 888-543-3980. If you're watching on LinkedIn, throw a comment in. I'll be answering those after the program. But also just have your own show. 888-LIFE-980. I've been doing radio now 19 years, trying to go to the modern technology of being a face for radio and actually showing the face. And we're on live radio here in Southern California. We're getting information out to you that's helpful, that's going to allow you to create a better pattern when it comes to your finances and eliminate debt. But it's also having the right loan. We talked about choosing a variable loan, a fixed rate loan, or the right loan that's correct in your circumstance. So whether you're purchasing using FHA, VA, if you're doing an investment property, fully qualifying, or using debt service coverage ratio, bank statements, whether you're doing commercial, whether you're doing construction, I can help. Now, I'm approved directly in 5 states: California, Colorado, Montana, Texas, and the state of Washington. We advise and give good information and refer professionals that need to be licensed to do business in your state or state of interest. But the DSCR loans I can do in 46 states. I want to make sure you're paying the right amount of money for what you're doing. Because what happens is, under most circumstances, people are overpaying. They really are. You're leaving money on the table. When you look at that closing statement, really what's the right tip to leave? 120%? No. It's bringing it down to a reasonable level and understanding, if you are paying that much of a tip, to how to get it lower. Because after the fact, we can actually utilize the Money Max account, a perfect financial GPS, to get you on a program to eliminate that debt efficiently. Take you down to a low number so you're paying down principal, because the interest is not going to interfere. We're going to move it faster using the same money, not looking to change your lifestyle, but we're going to show you how to do it. Numbers don't lie, but you need to know how to work with them. 888-543-3980. That's 888-543-3980. Now, the thing is, I talk about consumers, as you are, all of you, but also professionals who have influence to others. When you talk about finances, you talk about laying out funds, you talk about spending money to make money, but it's setting up the right foundation. It's having the right pyramid to set up the layers above. If you start layering the top without having a stable bottom, it doesn't work too well. So I want that understanding. So it's knowing the monthly, the quarterly, the semi-annual, the annual debts, knowing the intake, the outtake, all income, not just qualified income for loans, and understanding what your discretionary leftover money is at the end of every month. Is it $1, $2, $100, $1,000, $1,500, $2,000? How much money do you have extra at the end of every month going, oh my gosh, what am I going to do with this? And just stuff it into a bank, barely earning any money at all. First of all, we want to challenge that because every penny counts. But utilizing those monies more effectively, setting up that foundation of having a balance that you can live with every night, knowing that money is coming in, and that's important because you have to know you're making some money to come in. But using that to go forward is what I would like you to consider. That's Tuesday night, Tuesday evening at 6 p.m. I'd like to join a call. I'd like you to join a call that you don't have to speak or be on camera, but you can go ahead and listen to for 1 hour. If you like what you hear, I'd love to speak with you and set an appointment. If you don't, that's fine. Go do what you're doing now. But send an email, interest@aheadformoney.com, AHEADFORMONEY.com. When you do that, going to help you. The reason why I'm on LinkedIn is because I want to help businesses and business owners succeed. It's reaching to your past clients to show them how they can eliminate debt, to create wealth, to have money to utilize for your professional assistance. Because if they have higher discretionary monies, they can actually make money utilizing that or pay down debt to create family security. So I'm here trying and wanting to help other businesses succeed. And I want to network with you to allow you to get that information out to your clientele. And I can show you how to do that. Make a difference. Make a difference to your clients, for yourself, your family. If you're an individual on LinkedIn, I'd love to speak with you, understanding and showing you how this works so you can be in a better spot financially. Maybe you're prepared to work with others and items that you have gone without that you really should have to protect you and your family's future. Whether you're gaining a disability policy, a life insurance policy, whether you're getting the right car insurance for the first time, all these things matter, but it's cash flow. It's making sure that you're set up correctly to take the next step rather than taking 6 steps forward and not filling in what's in between. So as a professional, love you to reach out to me. My direct email, michael@unitedforloans.com, unitedforloans.com. When you send that email, I'm going to call or email you back, your preference. We'll set a time. We'll have a quick visit, see what I can do professionally and help you succeed. As a consumer, same thing. You give me a call. Love to talk with you. I'm never too busy to work or speak with you. I'm about action. I look for results. Say it again. I spend your money the way I spend mine, sparingly. I want value for my money, and so should you. Okay. The idea right now is your lender loves you. You don't need that kind of love in your life. Yes, I close loans. Been doing it for 38 years. But it's getting the loan, getting the right leverage, and then doing something responsible with it. Making sure you pay it off correctly with the right timing. Doing this a long time, seeing a lot of mistakes that people make. And again, I make mistakes too. And you learn to try to correct them as fast as possible and not make them again. So through others, I've seen a lot to help protect you not to get those mistakes made, saving you money. If I could put an extra $500, $1,000, $1,500, $5,000 extra because we did something, watching the market, timing some items, glad to put that back in your wallet. I like to know who you know that perhaps wants to save money, someone you know that wants to get out of debt, to create wealth, someone you know in the professional circle who has influence, whether it's a financial planner, CPA, realtor, divorce professional that I can talk with. Because making a difference in what they think will be that difference that they give to that next client. And they'll have something else also in their mind of thought. Because so many go one track, but they don't have a mind open to other. And I want to talk to those individuals who are receptive to that. So I'm asking you for your help today. Anyone that you know, friend, family, coworker, that you know has a mortgage, has debt, wants a better life, been working hard, I'd love to let them know that you stumbled upon my program today, that it's worth the call 888-LIFE-980. And we'll see privately what it is they have, what it is they can do, maybe what they're doing perfectly right and there's nothing additional to be done. But I believe it's coming to our webinar on Tuesday to start. And then we can kind of settle in and figure out what the path is, whether it's lending, whether it's organizing, understanding the money's in and out to create a better outcome. Sounds easy, but life gets in the way. Let me help you and guide you through that process. That's what I'd like to do for you. 888-543-3980. That's 888-543-3980. We saw the Fed move. I believe we have another move, and 2 more moves early next year. So we're in a downward circle right now. Rates could get lower. Mortgage rates might be not as fast or in proportion, but we're seeing consumer rates that will be going down. Right now is the time to look at a home equity line of credit because it will ride down a quarter each time it moves. So money will become cheaper on a simple interest loan that will pay off your amortized debt. So right now, it's a perfect time to lower your obligations even faster. A third or half the time without changing your lifestyle. This is really important because you're working and burning the money and it needs to work better for you. When I make that extra payment or extra item, pennies, dollars, based on what it is, I'm paying down and it goes in multiples of lowering my interest obligations. And I see that difference every single day. The first thing I like to see is getting on the other side of your credit card debt, using your credit card to borrow their money for your statement period rather than the other way around. So when you use your credit card, not a debit card, but when you use your credit card, and then when you get your statement and you pay it off in full, because you had the money, but now you have an itemized record through that credit card, and you're able to obligate groceries or household items and separate. Get points, get some items. I have travel that's being paid for. I have this happening. All these things come where I'm taking it off the bill. All of a sudden, oh, I apply this to this, and oh, okay, well, I got that covered. That didn't cost me anything. Little things make a difference. They're little wins, but they all add up. It's your season to get you to the finish line. And if I can start you on that winning track and you kind of see to get to the other side of not owing interest, but now borrowing for a period of time without paying any interest, without paying that 3-4% upfront to get that 0% offer for 18 months, you did pay. And if you pay it off early, you even paid higher than that front money because you paid that front money for that period of time. And if you miss the end of the time, then all of a sudden you have all that deferred interest to pay. Now I'm playing that game right now with one of my credit cards where they had an offer where if you charge a certain dollar amount, they put you off on the charge where they're charging you no interest. Okay, it didn't cost me anything up front. I'll play. So on my statement, it tells me when each of those promotions are ending. So what I try to do is pay that promotion that I didn't pay anything for, but I pay that future money that I got at no cost. I pay it off usually one statement before because I don't want to get into the thought that, oh God, I was a day late. And all of a sudden the deferred interest is getting thrown on. So you got to know how to play the game as well, but also not have it control everything that you're doing. I want to be a part of that. with you and for you, but show you how that works without taking over your life, actually giving you back some of the time that you're losing by trying to figure out what to do, when to do, how much to do, because you're playing a round of golf. You're hitting the ball. You don't want to be in the sand. You don't want to be in the water, but you want to be on the green. And if you're on the green, I want to get you closer to the hole or in the hole. I want to make a difference, but it starts with you. That's today. 888-543-3980. When you make that phone call, we will answer. Or if the lines are busy or we're on with others, you'll leave that message and let me know, and I will personally reach out to you because I want to make a difference in your real estate life. Many mortgage professionals here on watching. I appreciate that. Yes, we're competing for similar clients, but your clients are your clients, and I want you to keep them. I really, truly do. This is relationship lending, not transactional. And I'm helping you and want to help you build that relationship and make it stronger, because you're going to give a perfect financial GPS for your past, present, and future clients. If that resonates with you, I want to speak with you. 888-543-3980. If you're a consumer just trying to swim through and figure it out, I'm able to do this in 50 states. I want to talk with you today. 888-543-3980. When you see or watch this, you make the call. My personal email, michael@unitedforloans.com, FOR loans.com, because we are for loans. We're just not for the interest that you'll pay. We want to make a difference. And hopefully today, with the part that you have watched or all that you're watching, you're seeing that between choosing the right loan, between understanding the difference of terms of loans, between looking at the economic calendar, understanding when to lock, when not to lock. That is the question. It's understanding that from a professional point of view and what that means for you and your finances. And then it is about your finances, your ins, your outs, and everything in between. It's understanding where that money has gone, and then understanding what it is you can do to make it stop. Eliminate debt, create wealth, and have a more comfortable way to go to sleep at night. Don't have it keep you up. Understand you have a plan. And that's what we want to do here at Your Real Estate Life. Hopefully you enjoyed the program today. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. Go to our website at yourrealestatelife.com and unitedforloans.com. When you go there, you're going to get tremendous information about what's going on in the calendar, the economy, and where interest rates are heading. Take that information for what it is, but don't try to do the surgery. Let professionals help you navigate through your real estate life. Thank you again for joining us. I look forward to our next program. We are on Saturdays at 9 a.m. and every other weekend, Sundays at 7. Until then, what kind of loan do you have?
United Mortgage Corporation of America, UnitedForLoans.com will continue to take your calls after the program. Call now to start your home loan process at 888-5433-980.
Thank you for joining us this weekend. It's a very busy weekend for some. We have football going on Sundays. We have college football on Saturdays. We have baseball. Hey, season's almost over. Got a lot of fun going on. We saw Clayton Kershaw here pitch his final home game. He's got another game in Seattle coming up next Friday. So many things. I love sports, but I want to help you with your finances. Pick up the phone. Give us a call, 888-543-3980. We'll talk next week. Now, what I did was by mistake,